Hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In India, if you observe, more than 85% of the volume that is happening in any exchange, BSE or NSE, is from FNO, which is from futures and options. And SEBI has already published a report stating that 9 out of 10 people who are trading with FNO are not making money. So there is only 10% of the people who are trading futures and options are making money, where rest of the 90% are losing money. So when you consider this data, what is that 10% who are making profits are doing differently than those 90% of the people who are making loss? So that is what we are going to address in today's video, where we are going to guide you how you can trade options the right way. See, the first part is instrument, the kind of instrument that you are going to trade with options. There are index options and there are stock options. So if you're starting, it is much better to stick to index options, because even though we have more than 180 stocks which are part of FNO, not all these 180 stocks are not highly liquid. Out of this, maybe only 10 or 5 stocks can be highly liquid. Rest of the options might not be highly liquid. The stocks could be liquid, but that specific option strikes which you're going to trade, that might not be liquid. So it is always wise to stick to index options. Even with index, we have 5 different instruments. We have Sensex, we have Midcap Nifty, we have Fin Nifty, we have Nifty, and then we have Bank Nifty. So out of all these 5, the top 3 which are highly liquid are Nifty, Bank Nifty, and Fin Nifty. So with respect to instrument, it is wise that you should stick to these 3 instruments to begin with. And the next part is the biggest debate that is happening is option buying versus option selling. See, lot many traders are getting attracted to options buying in general, mainly because of the leverage it provides. You can trade with 1,000 rupees, 2,000 rupees, even with 5,000 rupees. I've seen people where they have traded with 5,000 rupees, and that 5,000 has turned into 50,000, because on that day when they traded, the market would have moved up in one direction or moved down in one direction. So due to which their options premium would have increased 10 times. So if they are buying an option at 10 rupees, they could have gone to 100 rupees. So these type of bigger movements, bigger gains attracts a lot of option buyers. But that doesn't necessarily mean that you can make such profits every single day. So if you are an option buyer, or if you are a trader who's trying to get into option buying, keep this in mind, which is 80% of the overall profits will come from less than 20% of the trades, which means that only when the market is trending you can make profits. Otherwise you can't make profits with option buying. So with option buying, you can't come in and trade every single day and try to make profit out of it. If you're trading 22 days or just 25 days in a month, out of that probably 3 or 4 days where you can see market moving in big trending move, and that is when you can capitalize the trending move and make profits. So don't try to make profits every single day if you're an option buyer. So you can make profits on a quarterly basis or on a monthly basis or on the long run. If you decide out of 10 trades, even with 6 profitable trades, you can still make money. But on an average, option buying versus option selling, if you take 10 trades with option buying, on an average maximum 4 or 5 trades can give you profits, and out of these 5 trades, which is 50% of the overall winning accuracy, maybe 3 or 4 trades can give you huge profits. The rest of the trades, 6 or 7 trades, could give you minimal losses. So the only way to trade option buying successfully is to follow a right position sizing. Do not put all your capital in one trade, or do not allocate all your capital in just one option buying trade. Instead, segregate that into 3 or 4 different segments. Say suppose if you are having 1 lakh, keep it as 25,000, 25,000, 25,000, 25,000. So you can take 4 different trades by risking only those 25,000 rupees. So out of that, say suppose if you are making 10% or 20%, that is good enough. But if you put all your capital in one trade and if that doesn't work, then you can lose a considerable amount of money. And second thing is option buying. When you are dealing with option buying, try to avoid certain strike prices. Let me show you what are the strike prices that you need to avoid. So we are seeing option chain of Nifty 50. So currently Nifty 50 is trading around 20,200, right? So here it will have the strike prices here, and there are no LTPs, call price and put price, and there is open interest levels here. So if you observe closely, people try, most of the time they try to buy an option which is bit OTM options. They don't want to buy a nearby options because that would be trading at a higher price. For an example, currently Nifty is trading around 20,200 levels, and if you buy any ATM options, it is trading around 19 rupees on the put side, and on the call side it is trading around 160 rupees. So nobody wants to buy such kind of high premium. So people always buy a bit OTM options. So in this case, if Nifty is trading at 20,200, they'll try to buy 20,000 strike. But if you check, this 20,000 strike is having the highest open interest. So out of all the put option strikes, if you scroll down and see, this 20,000 strike put option is having the highest open interest. So when a particular strike is having a highest open interest, it signifies that that will act as a strong support zone where people might not easily allow Nifty to break and go below 20,000 levels, because most of the option writers are around this level. So this signifies that most of the option writers are going to make money. So if you're an option buyer and buy this strike at 38 rupees, thinking that market might go down, then the probability of making profit is very minimal. So the thumb rule is, if you're an option buyer, try to avoid buying a strike that is having the highest open interest. So in this case, the example is 20,000 put option is having the highest open interest, so you avoid buying this. And with respect to call option, similarly, 20,400 is having the highest open interest, so it is better to avoid that. So whenever you are trading with respect to options buying on any day, be it expiry day or non-expiry day, always check whether that strike is having highest open interest. If that is having, it is better to avoid that strike, because the probability of making profit from that strike is very minimal. And with respect to option buying, trend reversal can give you higher profits than doing a trend following. For an example, if you see this chart, where market was going up here and it is trying to consolidate here, where, let me plot that graph for you. Yeah, here it is. So if you see here, this is a zone market now started moving up here. So market was moving up, and here it is facing a resistance and it is trying to cross up, but it couldn't go. So if you have bought a put option here, where when the market was trading at a nearly very all-time high, then the put options would have been priced at a much lower price. So you would be able to get at an attractive entry price, and within few minutes the market started going down. Similarly, here once it started going down, there was no follow through movement. So once the market started reversing here, where whenever I always mentioned that pin bar acts as a strong reversal level. So once you see the pin bar, and once that pin bar high is broken, so the formation of pin bar is done here, and the pin bar high is this, and once the pin bar high is broken, you can go ahead and buy a call option. And if you have done that, then by now it would have been in a very good profits. So always focus on those reversal zones when you are dealing with option buying. See, initially in the start of the video, I've mentioned that out of 10 people, 9 are not making money and only 1% is making money, which is only 10% of the people who are trading F1 options are making profits, right? So these 10%, what they are primarily focusing is on the process. So if you have observed any kind of Dhoni's interview, you would have clearly mentioned that he is why people are calling him as a cool guy, why this guy doesn't handle any kind of pressure so easily. Whatever that comes in this specific field, he is able to easily handle it with ease. He doesn't feel the pressure because he never focused on the result, he never focused on the outcome. But most of the traders who are trading in the stock market, they are always focused on the outcome. The moment they take a trade, or the moment they are about to take a trade, the first question they ask is how much I'm going to make in this particular trade. Instead of that, you should ask how much you are going to lose in this trade, so that your risk will come in front of you, so you'll clearly know exactly this is how much I'm going to lose. So accordingly, you will put higher capital or lower capital, so based on the conviction that you have in this trade. And secondly, most of the successful traders never stress so much on the outcome, because returns is not in their hand, but risk is in their hand. So only thing that you can control in the market is the risk, the amount of money that you are going to lose. Nothing else you can control in the markets. You can't control the gap up, you can't control the gap downs. No movement you can control with respect to markets. Everybody knows that. But still, we keep tracking how the US market is going, or how the SGX Nifty is moving, or how Hong Kong market is moving. So we keep tracking of all this because we have a open position. So I remember buying, a put option one day on a weekly, end of a Friday, I guess. Once I buy put option with a huge quantity, this Friday night, Saturday night, and Sunday night, I wouldn't be able to sleep because I keep thinking what would happen to the markets when market opens on Monday morning. So I have bought a put option and I expect there should be some bad news that should happen in the markets. So this is the basic, tendency that people have in their mind. When they buy, put option, they want the markets to crash. They want something bad to happen in the world because, they're holding put options and they want the market to go down. But more than your anticipation of market going down, why you are keep thinking about it and why you are losing your sleep, all this is not because of buying put option. It is because you have bought so much quantity of put options so that if anything goes wrong, you will lose money considerably. So you're not afraid of analysis going wrong. You are afraid of the number of lots that you have bought. So the major reason that most of the people are failing in the markets is they don't know how much is too much. So you need to clearly know what is the risk involved with each and every trade. And once you get that, and then once you take a trade, then everything becomes super smooth. Then you won't focus on the outcome. You will just focus on the process. People who follow process in the markets will eventually make profits in the long run. So coming to option selling segment. See, with respect to option selling, the major criteria is having a higher margin. With option buying with 5,000 rupees, 10,000 rupees, anybody could trade it. But with the option selling, at least you need to have a couple of lakhs to trade to get that margin and trade. And the second thing is, even though that is a con, or even though that is a disadvantage, the primary advantage with respect to option selling is you don't need to know where the market is going. So with respect to analysis, with respect to prediction, it is very, very hard to find where the market is going. But it is much easier to know where the market might not go. So you can see the chart and you know exactly, like, this is a support, this is the resistance. So whenever market comes near the support, market is going to go up. Whenever market is hitting a resistance, it is going to go down. The best way is to sell a call option on the resistance zone and sell a put option on the support zone, so that market is not going to break this zone. So as long as market keeps trading between these zones, these option sellers would make money. So that is how most of the option sellers are not trading in successfully. They know exactly where the market might not go. So it is not 100% sure shot, but at least they have a higher probability that, okay, these are the zones market might not break easily. So let me sell the strikes based on these zones and make profit. So that is how they keep take these trading decisions with respect to option selling. And people always say option buying gives you unlimited profits, but option selling gives you unlimited loss. But those are theoretical. See, as long as you don't have an exit mechanism, no matter what, whether you're doing option buying or option selling, you're going to end up making losses. So, with respect to option selling, say suppose you are shorting a particular strike at 100 rupees, and if it goes to zero, the maximum profit that you can make is that 100 rupees premium. But with respect to option buying, if you're buying at 100 rupees, it can go to 200, 300, 400. Like, as long as market moves in one side direction, it can keep going up, right? So that is why they say it is unlimited profits with option buying. With option selling, they say it is unlimited risk, because the moment you short at 100 rupees, your overall returns is 100 to 0. So 100 points is the maximum profits that you can make. But the risk is, say if you have not covered your position, it can go to 200, 300, 400, and you can face huge loss, right? So it is always wise to trade with hedge, or it is always wise to trade with a specific stop loss, where that there is specific zone market might not cross. But in case if your view is wrong, there should be an exit mechanism where, okay, if in case if I'm making a loss of 3,000 rupees, 4,000 rupees per lot, I'll exit. Or say suppose if market cross this resistance zones and moves up, I'll exit. So there should always be certain exit mechanism with your option selling trade primarily, because you might lose more money than whatever the margin that is blocked. So it is much, much important to follow a strict stop loss or strict exit mechanism when you're dealing with option selling. And the next thing is, I'm going to tell you about following a rule based approach. For an example, anybody who are trying to trade with option buying or option selling, there are multiple backtest platforms available there. So there is one platform, third party platform called AlgoTest, which helps you to backtest any kind of trading options. So let me show you how you can use this platform and trade or backtest any kind of trading ideas that you get. Say suppose if you wanted to test a short straddle strategy, I wanted to do a short straddle on every day with a fixed stop loss, how much returns I would get. So this is something where you can go and backtest using a backtest platform that is going to tell you in the past, if you have implemented this specific rule in the past, how much returns you would have got, what would be the maximum risk that you would have faced, or what would be the maximum drawdown, what is the consecutive winning streaks that you would have faced, what is the consecutive losses that you would have faced, and month on month profits, how much you can make. So all these metrics you can easily get it through any kind of backtest platform. So once you have this trading idea and once you backtest, and one that gives you a conviction, see, this is how it has worked in the past. So in the future, if you're going to deploy it in live, that can give you a higher conviction, because in the past that it has worked, probably in the future it might work. But in the backtest itself, if it is not at all profitable, whatever the idea that you get and trying to backtest that, if that trading idea is not at all profitable in the backtest, there is no way that you can make profits in live trade. So instead of directly trading live, putting your capital and burning your hands, it is always wise to backtest your trading strategies, ideas, and then see if it is working or not. If it is working well and good, you can try with one lot or two lot in the forward test and see how it is working, and then try to scale it up. If it is not at all working, then from then at that point itself, you can just ditch that trading idea and start looking for some other idea. So let me show you how you can use this third-party tool to backtest any kind of trading strategy for free. So algotest.in is the third-party tool which I have mentioned, where once you go and once you sign up, you go to dashboard, and then you can click on backtest create strategies. And once you click on that, then you will have an option to select the kind of instruments that you wanted to backtest, whether it is going to be an intraday or BTST or positional, whatever you want, you can test that. And whether you wanted to square off both legs, call option or put option, or you just wanted to square off only one specific option. And this is how you can select the strikes. So for an example, I have selected option segment here. I have mentioned one lot, and the position, instead of buy or sell, I have selected sell, and I've selected call option, and it is weekly strike price, and I've selected ATM option and clicked on add leg. And now I wanted to add put leg as well. So now I have two different legs. First leg is call option and the second one is put option, where I wanted to short these two strikes every day at 9:35 a.m. and I want to exit at 3:15 p.m. And as I mentioned earlier, it is always wise to use a stop loss. So I'm mentioning a stop loss. Say suppose I wanted to use a stop loss percentage of 30% on the premium. Okay. So I mentioned stop loss. That's all. So as per this specific strategy, I'm trading a short straddle, entering at 9:35 and exiting at 3:15, and I just wanted to backtest it and see how much profit that it can give in the past. So I'm just trying to test it here. We just mention the dates here and then run backtest. And once you run backtest, it would automatically go through these historical data and tell you exactly how much profit that it has made from 2017 to 2023. It would tell you how much it could make, and accordingly you can decide. So here's the overall P&L. So the green line that you are seeing is the overall profits that it has made. So almost it has made 4 lakhs of overall profits in the past, and this is how much the drawdown that it has given, and this is the overall month wise and year wise total P&L and how much it has made on a month on month basis and on a year on year basis. And also once you scroll down, it will tell you like overall statistics, like what is the maximum drawdown, what is the continuous winning streaks, what is the continuous losing streaks. So all these ratios that you can easily check it, and also you can download this as a report, the trade report, and do any kind of analysis. So if you wanted to backtest any kind of trading areas, then you can use this platform that lets you to backtest, perform 25 backtests for free every week. And to conclude with, see, there are two important things. One is expiry days, other one is non-expiry days. On expiry days, market could be highly volatile compared to non-expiry days. So if you are getting started with options, try to trade with a reduced lot size on options, specifically on expiry day, because that can give you a higher risk. And secondly, whether you are an option buyer, when you try to deal with hero or zero segments, where they try to buy 1 rupee options, 2 rupee options on expiry days closer to 3 o'clock, expecting it to go 10 times or 30 times, right? So see and try to backtest whether this hero or zero might really give you profits in the long run or not. There are 1 days, there are 2 days where you can make profits, where the market suddenly moves in one-sided direction post 3 p.m. You make huge profits, but you can't replicate that every single week. So go and backtest those ideas and see if it is really profitable. Otherwise, don't try to trade this zero or zero type of strategies every single time. And the next part is, if you're an options seller and primarily focusing on expiry days, try to control your risk rigidly, because no expiry days could easily kill you if you don't handle the volatility. So try to keep all these things in mind when you're trying to do options trading. So I hope all this information should be really helpful for you. So I'll see you guys next week with another video. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.